never again day trade like a noob. So if you don't know who a noob is, unfortunately, it's the short form of newbies. When I say unfortunately, the terminology, I'm not so sure whether it's a good terminology or not. But anyway, that's how it's used. If you are new, there is a way in which you trade as a newbie. Let me say there is a way we all have traded as newbies, which is, in our zest to make profit, when prices are tanking, we bail ship, meaning we sell. And then when prices are going up, we buy. The opposite is the case with professionals. Professionals will sell on the upswing when prices are going up, and the pros will buy when prices are going down. So now that begs the question, how we're supposed to know when to buy and when to sell. So really, this live stream is about when to buy, when to sell. And of course, I will take your questions afterwards that are just pure trading questions. So how can we not trade like a noob? Trading isn't just about knowing what to do. And I think this applies to every area of life, to be honest. Trading is about doing what you know to do. So it's two things. We can know that we're supposed to buy at a certain point, but we may not buy at that point. And then we may know that we should sell at a certain point, but then we don't sell at that point. So that is a different area of trading, which is trading psychology, or you could just call it trading discipline, where the more disciplined you are as a trader, the more profitable you'll be. So the more you keep to the rules that you know, the more profitable you'll be. So if I go to the first point, which is a support level is where the price tends to find support, which, is intuitive. It makes sense. Price will find support when it is dropping. So we always have those situations where price drops on us. We feel it more when we're in a trade, obviously, and it's dropping. All the emotions come up. And of course, you might have your stop loss. You may not have your stop loss, whatever the situation. But when price is dropping, we all get excited. Okay. Now, so a support level is going to be that point where price where the drop will stop. Hopefully. Or we can say it this way, where it is more likely that the decline in price will stop. So it's a more likely, meaning there is a greater probability. So it makes you feel sometimes that trading maybe is a probability game. And there's a portion of trading that is a probability game simply because nobody knows the future. You got to be God to know the future. And we are all humans. We do not know the future. We do not know how any security will trade in the next hour or even in the next minute. We can just look at the historical data and predict. Hence this term, more likely. So this means that the price is more likely to bounce off this level rather than break through it. Okay, so if we know that at an area of support, price is most likely to bounce back up, the question is, should we be selling or should we be buying? So I'll repeat that again. If we know that an area of support is a point at which statistics have shown that it is more likely for price action to bounce off, meaning to ricochet off it, to bounce right off it, rather than break through it, should we be buying or should we be selling? I'm going to show you a chart. It's the only chart I have to show for today. Okay, so we see at these white arrows, we see points at which price has gone up all right, but it begins to drop. And sometimes those drops can be pretty steep and pretty scary. We're on I think this is an hourly chart. And so for every candlestick here that is dropping, that is a long time. And there is a tendency, the human tendency, to want to bail out of that trade. But if we know that, now I haven't actually drawn supports down here, but let me draw a support level. One more support level. Down here. Okay, if you want to know how to draw support and resistance levels, you've got to learn how to draw them. And of course, you've got to practice. And usually, after you've drawn your support levels, it's also a good idea to double check your levels against the Fibonacci levels, which is an automated way of drawing support and resistance lines. Okay, so I've drawn another level down here, and we see price action comes down from arrow number 1, and it does not break down below. Not at this point, and not at this point. It does not break down below. It is more likely, according to our definition, to bounce back up. So at this point, guys, the professionals are buying. Now, I want you to listen to what I'm about to say. They are buying because noobs are selling. They are able to buy, the algorithms are able to buy your panic sells. But there's a caveat. The caveat is this is usually the case in an upward trending market. Now, you've got to be sure that you're in an upward trending market in this situation. So you would have done your due diligence. You would know, maybe you have your trading signals. Maybe you have analyzed your charts on the higher time frames, the daily, the weekly. You know this security is going up. And so there are always going to be those momentary drawbacks or retracements. It's important that, now this isn't always the case. So this is where trading, I won't say trading is complicated, but there are different setups for different scenarios. So this is a scenario where the market is trending upwards. We have another situation at arrow number 2. We have a slight sell-off. So you could call it panic selling. Everybody's hitting the button, sell, sell, sell. Price is going down. I mean, look at this big arrow. Let's increase this. Look at this big red arrow. Yes, it's enough to get anybody distressed, you know, when you see your investment going down. And so, but once you know you have an area of support, everybody else might be panicking, but your little karma, because you know there is a greater likelihood that price will bounce off it. It bounces off at this point, and it bounces off again at this point. The bounce off support, not that one, the bounce off support is at the blue areas, is where we have that likely chance has occurred, and price trended back up. Now we see over on this third area, we see it at the third point here, price doesn't quite come down. There's a sell-off, people are selling, they're getting excited. Oh, there's my investment going down. The noobs are getting excited, but you, hopefully, as the more seasoned trader, I mean, if you're listening to me already and learning these concepts, and you're already a little more seasoned than the guy who doesn't really understand the importance of support and resistance. But I want you to look at, let's move, see if I can move. Yeah. Look at this baby here, guys, this area. Just look at what happens here. And this time I'm going to use, look at what happens in this rectangle. Price action. So of course, maybe at this point, it will be a good point for me to change the color of, no, I removed it. Okay, I didn't want to remove it. I wanted to change the color of that support line. I want to change it to, Let's try purple. Okay, so now to the left of this dotted line, our purple level was resistance, but to the right, it becomes support. So now we're further along in time. Yes, we're further along in time, and we can see again, how many hours of sell-off? This is a big sell-off, okay? Panic selling. The noobs are hitting the sell button, but you know there is a white support line right below it. So you're a little more patient. Yes, you can see your profit and loss going down, but you know that at this support level, there is a greater chance that it will bounce back off it. Again, the caveat being that you know you're in an upward trending market. You know your security, based on your analysis, you know it's upward trending. And look at this. Everybody jumped off. We've all been there. You're in a trade. It's going down. You sell. And the minute you sell, that baby jumps right back. It's almost like it was waiting for you to sell for it to jump back up. And then you wonder, what made me come out of that trade? Yeah, so it happens to us. So what we want is, in trying to improve our trading style, we want to do that less and less often, to the point where we're not doing it at all. The reason why it's something that you have to practice to do is because your emotions are always there. And we, as traders, we improve by being able to allow the reason and the logic of the charts to override our emotions. Hence the psychology of trading, which is a very, very important aspect of trading. Without understanding the psychology of trading, it's going to be hard to be profitable. Take it from me, it took me 2 years before I could register a profit in my trading. Not that I wasn't winning trades, but I was losing more trades than I was winning, all because I didn't understand about trading psychology. So that's it. I always like to look at the time. That's it for my charting for the day. I'm going to go back to so a support level, we've done that. Now let's move on to a resistance level. So it's the opposite is the case. So in a resistance, now this second part is important in a downward trending market. So in a downward trending, so let's read it. It says a resistance level is the opposite of a support level. Yes, we know that. It is where price tends to find resistance as it is rising. So price is going up, and then it hits that top point where there is a greater likelihood that it will bounce down. The noobs are buying as it's approaching resistance. We've all been there. Hands up. Remember in class and say hands up if you've if you've been there. We've all been there where price is going up, we're getting excited and we're jumping in, but the pros, let's see what they're doing. This means that the price is more likely to bounce off this level rather than break through. So the pros are doing what? They're taking profit. The pros cannot take profit if you are not, now remember with a trade, a buy means somebody has sold. You're able to buy because somebody sells to you. You're able to sell because there's a willing buyer. So when you are busy buying because price is going up, the pros are busy selling and taking profit. I came across this, I don't know, guys, you can take a picture of this quote. You can take a screenshot of it, but let it be in front of you every moment of your trading day. And I saw this saying, and it says, "Thank you, crypto God, that there are still people who panic sell to us on support and FOMO buy from us at resistance. Thank you that they start buying at the right moment so we can smoothly realize our profit." So if you're one of these if you tend to buy approaching resistance, You are making it possible for the pros to sell and take your money. So I started off by saying it's one thing knowing about these things, and it's a completely different thing doing. The doing only comes by practice. So screenshot this saying, guys. I'm probably going to post it. I'm probably going to pin it at the top of my Telegram group. Now, this is a funny story. I have a Telegram group, and I always pin the link to this Telegram group in the chat box. And it's always in the description box when I turn this, upload this live stream into a video. This is a true story. And so there's this guy on my Telegram group. And I mean, most of the people on my Telegram group tend to be into cryptocurrency and tend to be newer to the crypto scene, or newer traders. And this guy is like, there must be something going wrong, because every time I get out of a trade, almost immediately the price goes up. So he was convinced that there was something spying on him in the setup where, you know, price is tanking. He gets out to save his money, and immediately price shoots up. And that I thought was pretty funny. That's what we call a conspiracy theory. And all it is he's a noob. If you do that, then you are funding the whales. You are funding the algorithms. You are funding the more seasoned traders who know exactly what to do. And that's all I have for my teaching session. And so I can take questions. Do you have any questions? Let's see.